What's going on, guys? So I kind of want to do a little bit of a trade recap and breakdown on the NASDAQ 100, the triple Qs. Friday, even Thursday, red days, extremely hard to trade, especially early on in the day. As you guys are becoming more experienced traders, as you guys are getting more comfortable trading, and as you guys are seeing the markets more and more, and just kind of how different their personalities can be from one month to the next, from one year to the next. You're gonna need to start really identifying the way that the market moves on a day-to-day basis, and you're going to also have to actually be patient on some days. Even though you're a day trader, does not mean you need to take a gajillion trades each and every single day. Just because you want to trade does not mean that you need to, right at the market open, be looking for 20 different stocks to trade. Sometimes you just need to stay patient. Sometimes you just need to sit back. If you enjoy watching the markets, that's completely fine, but it doesn't mean that you need to be looking for each and every single setup. It doesn't mean that you need to be taking 10, 20, 50 trades a day. Sometimes it only takes one trade, and maybe you need to wait all day for that trade to form, but you kind of sometimes need to see, significant amount of price action to kind of get a clear direction of the market. This last week especially, I was a big believer in kind of sitting out that first 30 minutes to an hour, letting the 5-minute candles kind of play out, showing me some price action, kind of getting the day's momentum mapped out. Did we take out previous day's high? Are we still trading below, or are we still trading above previous day's low? Are we stuck in a tight range? Is this an inside bar day? And what I was noticing, especially towards the end of the week this week, was that markets were not the best to trade. Now, was there opportunities to make money? Of course. Was there opportunities to make money scalping to the long side? 100%. Was there opportunities to make money scalping to the downside? 100%. But here's the problem. When you come off a market that was extremely hot, and I mean hot for 3 weeks straight, you get so comfortable just every time we dip that things are going to bounce, or every time we wash out that we're going to get that continuation back to the downside. And what a choppier environment tells you, especially when we're testing big daily macro levels on the NASDAQ 100 like we were this week, it kind of tells you that, things look good long, and then maybe 5-10 minutes later they break down. Things look good short, and then maybe 5-10 minutes later they bounce up. A lot of people were getting chopped up this week. A lot of people were finding trades difficult to find, or maybe you had a biased long, and then you kind of got washed out, or maybe you had a biased short and the market kind of corrected your bias. But staying patient is always going to benefit you in the long run. You never need to feel like you're missing out on the next, big home run trade because you did not take a trade the first hour or two of the market. Because in fact, I took one of the biggest trades of the day for me, came towards the later part of the day, 10:10 Pacific Standard Time, my time. So this is well over 3 hours after the market has already opened. Now, did I take trades early on in the day? Yes. Did some of those trades stop me out? Did I lose a little bit? Yes. Did I make a little bit? Yes. But the real money that kind of made up my daily P&L did not come until the back half of the session. So you can see here, this is Friday's price action. We had a big drop off the open, then we kind of tested and bounced the 20-day moving average on the 5-minute time frame, kind of got rejected and flushed and washed out here. Not really too much of a trade here. I mean, if you took this trade, you probably would have been stopped out. You would have lost a little bit of money. Maybe you would have taken this long trade here. It gave you about $1, $2 move. If you didn't scale out your position and always lock in those quick profits, you would have came out, got stopped out, or broke even here. A lot of this price action would have probably just frustrated you. You wouldn't have really known what to do. You're probably somewhere in here trying to look for trades on different stocks and, trying to find things to trade, not really finding anything. But it was really here around 10 o'clock Pacific Standard Time where the market started to get a little bit weak. And then we got this close below the 20-day moving average. If you would have just kind of sat patient, maybe taken 1 or 2 trades, kind of maybe let's say you won one trade and you lost another trade, and you're kind of just telling yourself, you know what, I'm just going to wait till the later part of the day, see if a market wants to really pick a direction, and maybe I can get something going here towards the end part of the day. If you would have kind of seen this setup here, said, hey, you know what, We were trading over the 20 period moving average for quite some time. This is the first time that we closed below. Hey, if this confirms, I'm going to go ahead and take my shot. If I was to just draw a price level here and kind of give you guys an example, because this is the exact trade that I took, the price of the triple Qs was 351.51. We got this confirmation at 10:15 Pacific Standard Time. I entered this trade here. I did go heavy on my sizing just because I wanted to, if this trade was going to hit, I wanted to make sure that it was going to be well worth it. And if I got stopped out, I knew that I was going to stop for the day and just kind of hang it up. This trade went from 351.51 all the way down here to a low of 349. So that's about a 2.5 point move, about a $2.25 move before quickly bouncing and closing back over this 20. Now, I didn't catch the whole move, obviously, all the way here to the downside. You know, you never do. But when we started to trickle down here, I started to scale out my position. When this started to bounce, I did scale out a little bit more of my position just due to the fact that I knew that the market was choppy. And I knew that if this did reclaim the 20-day moving average, it potentially had room to stretch. But when we got rejected here at the 20 and we got this initial close, when we got this flush candle close, this is where I sold. Okay, I sold somewhere in this body. I'm not going to tell you that I bottom ticked this down here because obviously I didn't. As this candle started to confirm this price action here and we started to wash out, I started selling somewhere below the 350, 349.60 or 349.80, 349.70, and I was out of my position before we got all the way down to these lows, which was 349.36. So somewhere in the middle of this body candle. But that's the thing, guys. You have to stay patient. You have to trust your strategy. And you have to have that discipline to understand that, hey, if you're getting chopped up, maybe it's better to just sit on the sidelines until something else does develop. And if you kind of just wait and wait and wait, and you take that next trade after waiting and after being chopped up, and you get chopped up again, that is your sign and your cue to just kind of call it a day. The market is what the market is. The market does not owe you guys anything. We have to trade the price action that we're given, not the price action that we want. I hope this video helps. Guys, do me a favor, join the Discord. That link is down in the description box below. Also, subscribe to my channel, give me a thumbs up, leave me a comment, and I will see you guys all in the next trading recap.